Welcome, everybody. Good morning. This is Michael coming to you from Gamma Edge on Wednesday, October 22nd, with our pre-market prep session. As always, here at Gamma Edge, we'll cover those three pillars: sentiment, structure, and trend, as well as cover individual equities for the day coming from our community and people joining us online. So, as always, like and subscribe on X and YouTube. You'll be notified when we go live, and check out our content we've posted in the past few weeks. And as always, we'll go over joining us at gammaedge.us, where we have a blog as well as a free newsletter and education, and you can join our Discord. All right, heading on to our market trend model for today. This is based on the tick index. As always, quick orientation. The bolded white line is our intraday instantaneous cumulative tick that you can see here. Yesterday, after the significant update on the 21st and 20th and the 21st, we had a consolidation day into the afternoon via our tick, which is a bolded white line here, with the SPX price obviously just continuing to go sideways, which is the green here. So what we're going to look for today is consolidation sideways via the market trend model, or do we have a continuation linear update? And the market trend model will turn from lower left back to upper right, or this flat consolidation emerge above these shorter term moving averages that we put on for momentum, and we'll continue to the upside. Key development though is now we're above the colored ribbon on the tick US, and this red needs to flip above the cyan. This would indicate a longer term uptrend is beginning to start again. As you notice, we had that ribbon flip to the downside where that red was below cyan for multiple days. That was obviously indicating market weakness. So we're going to watch this intently to see if we do get that red to flip above the cyan. And the market trend model, as well as this bolded CT, continues to the upside. Yesterday, new highs versus new lows, fairly flat. New highs were outpacing new lows on the breadth indicator. The filtered cumulative tick, again, fairly flat. We were above the zero line, but not significant buying as we saw in the linear update here. Just a different change within the overall look. So again, we'd like to see the filtered cumulative tick, which are institutions, plus 1,000, minus 1,000 larger block orders, continue to the upside, indicating that institutions are buying more than selling and putting capital to work. All right, moving on to the tick RC. Again, this is how we trigger our mechanical portfolios. And if we're above the colored ribbon and we have a positive slope in the red and cyan, then our mechanical portfolios are turned on as they are today. Again, the tick RC is slightly above these shorter term moving averages. So we'll continue to watch this to see if we consolidate or pull back down towards the colored ribbon or continue with the upside. Again, like to see the red above cyan here, which is that colored ribbon flip. And we're starting to get a more positive slope in the red, again, indicating that we may be starting a little bit longer uptrend within the overall market. All right, let's move on to the SPX. Again, option structure, largest, most notional value. That's why we look at the SPX option structure to get an idea of where market participants are positioning via call and put speculation. We separate the SPXA, which you'll denote up here in our web app, from the SPXP. Again, the SPXA is the tankers or the cruise ships that move the overall price action and structure. With the November expiry turned on, we are call dominated above and below spot price. Again, transition area, we're looking for that 67.65, 67.70. You want to stay above that area. If we're in the transition, at least on the SPXA, it can be some choppy price action. If we're going to have price appreciation up towards 6,800 and speculation areas strikes to the upside, then we need to be above this transition area, just in a little bit more favorable environment. Really nothing to talk about here, though. Still call dominated structure above and below spot price, so should be supportive on pullbacks. And we have out of the money speculation still speculating or still opening strikes to the upside. So again, looking for price appreciation via the SPXA. SPXP, call dominated, all expiries turned on. You'll notice by the tiles over here. Again, call dominated above and below spot price. Green net deltas, just indicating that calls and call speculators are in control. Very narrow transition heading into today, 67.30, 67.35. Again, we want to be above that transition area for a little bit more call dominated positive gamma structure and environment for a move up towards 6,800, which is that PGX level. Then we have COTMC at 67.90. You'll notice a confluence between all expiries as well as 0 DTE. So that may be a stalling area to the upside if price starts moving up away from a couple of our key areas we'll talk about on the 0 DTE. Moving on to the SPXP GEX ratio. Again, this is our gamma edge ratio. Again, short dated call gamma versus short dated put gamma. Again, we like to see if the SPXP is appreciating in price, or sorry, if the SPX is appreciating in price, you want to see the GEX ratio continuing to have a positive slope. That's indicating short dated call gamma going in versus short dated put gamma. Again, we're just kind of consolidating with that GEX ratio. We're hovering around the 1.5 level. So again, call speculators and bulls are still maintaining overall control. What we want to watch for is a divergence. If we have a spot price up, but negative slope and the GEX ratio moving down, that'd be indicating that short dated out of the money call speculation is starting to degrade and not necessarily supportive of price action moving up. So we'll continue to watch this day over day, but still call dominated bulls are in control. And if spot price continues to move up, then we want to see this continue in a positive slope. But as of now, we're just in a consolidation mode. Pretty much. All right, moving on to the delta balance. The quick orientation, the green dotted line is the out of the money call speculation or in the money puts. As long as you're above 0, call speculation is maintaining control. The red is in the money calls, that's below spot price, that's your left-hand plane or out of the money puts. And then the aggregate is the blue dotted line, the delta balance. Again, you want all of these above 0, indicating call speculators are in control. And then on out in time, you want to see this maintained above 0, and then the delta balance locked in at +1, again indicating call speculation is continuing to be maintained. You will notice, the red or the green dotted line here is the right-hand plane. That's the out of the money call speculation. Starts to increase into next week, but then we see the left-hand plane dropping slightly. So we'll keep an eye on this, but the out of the money call speculation is really what we want to watch. Again, that's indicative of possible price appreciation and speculation to the upside via the SPX. All right, moving on to net stack command, high sensitivity levels for today. We'll take this line by line. Net delta in the money calls below us, out of the money calls above us. Again, that's supportive type action on any pullback. 6650, you'll know the left-hand plane integral is really 2x the right-hand plane. So again, supportive on any pullback towards 6650, 6640 area. We'll talk about that via the SPX 0 DTE structure here in a few minutes. And then to the upside, 6760 out of the money call area. Net charm, as long as we're above 6700, will be supportive as these out of the money puts decay through the day. Again, out of the money calls, as those decay, those will be a headwind at 6780. So that's why we talked about 6780, 6790 being an area that we could see some pausing and stalling action. And then obviously gamma, high sensitivity levels, and then Vanna if we do see volatility continues to drop. All right, moving on to the SPXP 0 DT structure. Again, very narrow drunken sailor range for today. That's what our X post was about. Again, very narrow range for GEX and DEX transition. So if we're above, looking for price appreciation above the DS area at 6750 towards 6780, which is PGEX, and then 6790 COTMC. And then remember, 6800 was actually PGEX on the all expiry. So again, I would include this area as an area where we'd see some stalling if price shoots up towards that area. And then below transition, we'd probably look for a little bit more weakness if we start capturing these out of the money puts, adding negative delta to the complex for a pullback down towards the 6700. So again, clear dividing line for today, transition areas as well as the drunken sailor range for trading. And we'd like to play on the edges of this drunken sailor range or transition areas. If we're above, we'll look for price appreciation, and below, look for price pullback down towards 6,700. Call dominated, net GEX 15,000. So again, very supportive on this overall structure heading into today. With that, we'll go over to the trading view chart. I've already overlaid our scripts for this morning. Again, full expiry script is here that I've overlaid with the trading view chart. And again, 0 DT transition area, as well as our drunken sailor range, I've manually put in here. And as you can see, just pre-market, as well as yesterday, we tested the top of the drunken sailor range, which was just a little bit higher. But again, that's a key area for today. And then most likely chopping within the overall drunken sailor range as well, and holding above the overall transition area. So again, playing within this area can be extremely choppy price action. If we drop below the transition area, we'd look for a pullback down towards these key levels for full expiry. And if we're below that 6713, we'd look for 6700 to the downside. And then again, if we move above the drunken sailor range, as well as the previous day high, that's a key area for most technical analysis traders. Then we were looking for price appreciation up towards 67.80, 67.90, and then 6,800. Again, this will all be driven by our intraday vol metrics, as our vol M command. And we'll be watching for the massive market participants and where they're speculating, if they're speculating to the upside or speculating to the downside, or in a transition kind of look via our vol M command, which we most likely will post after the open. All right, as always, join us at gameedge.us. Sign up for our newsletter, put your email in. You'll be delivered that on the weekends. Goes into all of our thesis, strategy, and tools. Again, free courses, Game Edge Fast Pass flagship options course. Make sure you sign up for that, as well as the other 2 courses. And then, as always, click on the pricing tab. Come join us in our Discord. Great trading community that continues to expand rapidly with traders of all experiences and all backgrounds, helping you navigate the SPX option structure, as well as individual equities, learn how to use our tools, as well as our Game Edge team is in the trenches every day trading with you. So with that, anybody wants to cover any individual equities, I'd be happy to via our web app. We can look at the overall structure as well as next expiries via these tiles over here. So if you post those in the chat, we'd be happy to cover those. If not, I can just go through some individual equities via our TradingView scripts this morning. Again, thanks for joining us. Like and subscribe, and you'll be notified when we go live with any of our content. Amazon, yep, check out Amazon. So all expiries turned on here. Call dominated above below spot price, looking good. Above transition, looks good. Supportive on any pullback. Definitely speculation to the upside towards 225, and then COI is 250. Let's look at this expiry, 225 PGX COI. So that would be the target for this week. And then next week, PGX is 225, COI moves up to 250. So we still have speculation to the upside. So Amazon looks good. 225 this week, price target, and then possibility of moving up after this expiry into the end of the month is how I would look at Amazon. Structure looks good there. Oracle. Call dominated above and below spot price. I had looked at Oracle before for somebody a few days ago or a week ago. The main concerning thing for me was we were below transition, even though we're call dominated. We have significant out of the money speculation, out of the money put speculation here down towards 260, and we do have in the money calls above us. Obviously, we are call dominated, but a significant amount of in the money puts overhead also. And then, yeah, this is what I thought. This expiry was put dominated. Next expiry was put dominated. So price appreciation Oracle not looking great for the upside unless the structure changes significantly within the next few days and towards the end of the month. So if you're looking long, that'd be one that I would most likely probably stay away from or look to take profit as the structure is not really advancing very rapidly. AVGO, call dominated above and below spot price. You're above transition, which you're in a more positive call dominated state. 350 PGX COI, all expiries. This expiry, 375 to the upside, and then call dominated, so PGX and COI, so structure looks conducive to upside move there. But then we drop back down to 350 after this Friday, and then 345. So the structure is not really advancing significantly through the end of the month. So 350 to the upside may be the cap on price, even though we have a lot of out of the money speculation, but that drops pretty rapidly after this expiry for Friday. You'll notice that as the structure drops after this expiry. So Tesla, yeah, let's look at Tesla. So hopefully that helps on AVGO. Tesla call dominated above transition. 450 is PGX. Significant strike up there at 500 looks like via our gradients. Let's look at this week's expiry. 450 PGX COI, so that'd be a cap on price for this week. Let's see if the structure moves up. So how I look at the structure moving up, I like to watch the transition areas as well as PGX and COI. We have other tools within the within our Discord that helps you visualize this also. So after this expiry, 440 is the PGX, but we see COI jump significantly. So that's capturing that strike. And transition widens a little bit. 435, and actually drops. So that's still supportive type action into the month, 450. So 500 out of the money speculation, but the structure doesn't advance very rapidly through these next expiries. So 450 looks like it's probably that upside area. PLTR. Let's see. Call dominated. Within transition, at least on all expiries, 185 PGX COI. So that looks like the cap on price to the upside. 185 PGX COI. Significant amount of out of the money speculation, but not pulling that PGX COI up much. We do jump to 190 after this expiry. So PLTR looks like an opportunity to appreciate towards 190, after this expiry, and actually goes to 200 after the end of the month. So speculation to the upside on PLTR. So it looks good there. Again, doesn't mean we're going to, that's exactly going to happen. That's just letting you know where the structure is at. Obviously, market needs to cooperate also. So Meta, call dominated, all expiries, PGX 750 above transition. So it looks like that's starting to improve. Call dominated 750, PGX COI. Next expiry 750 and COI actually jumps to 800 and transition narrows. So Meta is actually looking much better. I know it had a decent pullback, I think, for the past few weeks. Now, again, I'm not taking into account when EPS is. Obviously, we're getting into the heart of earnings season, so EPS may be within this overall expiries. So make sure you check that before executing any trades. So. All right. Thank you, everybody, for joining us this morning. Appreciate it. Again, like and subscribe, share our content. You'll be notified when we go live. We usually do a midday recap as well as a post-market recap. And as always, we try to do a pre-market prep as our schedule allows with our team. Again, thanks, everybody. Make it a great day.